Imagine the money in your wallet, the cash you've saved for a specific purpose, suddenly being declared invalid. Not just worth less, but completely worthless, a collector's item at best. This isn't a financial horror story. This is the reality now unfolding for the Iraqi dinar, as the Central Bank of Iraq has officially confirmed the process to retire and replace the current banknotes in circulation. This monumental announcement is the most significant development in the currency's modern history, and it directly impacts every single person holding these notes. For over a decade, the global community of dinar watchers and investors has been anticipating a momentous event known as the RV, or revaluation, a potential overnight shift in the currency's value that could create profound wealth. Until now, that discussion has been dominated by speculation, rumor, and interpretation of vague political statements. But today, we have moved from the shadows of speculation into the clear light of confirmed policy. The central bank itself is initiating the change. This is no longer a question of if, but a matter of how and when. The decision to replace a national currency is arguably the most drastic step a central bank can take. It is a logistical nightmare, an expensive undertaking, and a move fraught with political and economic risk. So why would Iraq choose to do this now? The answers are complex, but they all point toward a single overarching ambition: to finally and irrevocably integrate the Iraqi economy into the global financial system as a stable, trustworthy, and sovereign nation. The current banknotes, particularly the larger denominations, are relics of a painful past. They are symbols of a previous regime, economic sanctions, and profound instability. By introducing a new family of banknotes, the central bank is performing a symbolic act of shedding that old skin. It is a declaration to its own citizens and to the world that a new chapter is beginning. This is about national pride and economic identity. But the reasons go far deeper than symbolism. This move is a critical weapon in the government's long-standing war against corruption, black market money laundering, and the financing of illicit activities. A significant portion of the Iraqi dinar money supply, often called mattress money, exists outside the formal banking system. This shadow economy makes it impossible for the government to control inflation, manage the money supply effectively, or implement modern monetary policy. A currency replacement, especially one with a strict deadline for exchanging old notes for new, acts as a giant magnet, pulling all of this hidden cash out of the shadows and into the regulated banking system. Once that money is in the system, the government can track it, tax it, and control it. This dramatically increases the central bank's power to stabilize the economy and build confidence. Furthermore, this process is the physical execution of a long-discussed plan to delete the zeros from the currency, a process known as redenomination. The Iraqi dinar is so devalued that simple, everyday transactions require carrying unwieldy stacks of cash. Buying a refrigerator or a car can literally require a suitcase full of banknotes. This is inefficient, insecure, and embarrassing. With the why of the currency replacement established, we now arrive at the heart of the matter for every investor and currency holder. What does this mean for the exchange rate? This is the multi-trillion-dollar question, and to answer it, we must perform a clear-eyed dissection of two financial concepts that are constantly and dangerously conflated: redenomination and revaluation. Understanding the stark difference between them is the key to navigating the coming months. Let's start with redenomination, which is the official, stated goal of the Central Bank of Iraq. A redenomination is an administrative event, a technical adjustment to the face value of the money. It is like changing the units of measurement without changing the actual distance. A classic example is when Turkey introduced the new Turkish lira, where 1 million old lira became 1 new Turkish lira. The value was identical. You just carried a single coin instead of a wheelbarrow of notes. If Iraq redenominates its currency at a rate of 1,000 to 1, your 25,000 dinar note would become a 25 new dinar note. If the old exchange rate was 1,310 IQD to $1, the new rate would become 1.31 new IQD to $1. Your purchasing power, both inside Iraq and on the global market, remains precisely the same. You have not gained or lost wealth. You have simply participated in a monetary simplification program. This is what the central bank has communicated for years as its primary objective. Now let's talk about a revaluation. A revaluation is an entirely different beast. It is not an administrative change but a fundamental, market-driven or policy-driven increase in the value of a country's currency relative to other currencies like the US dollar or the euro. For a revaluation to be economically justified and sustainable, a country must demonstrate a dramatic and lasting improvement in its fundamental economic health. This includes massive foreign exchange reserves, a strong and consistent balance of payment surplus, controlled inflation, political stability, and a diverse economy that attracts foreign investment. So, where does Iraq stand in this assessment? This is where the analysis becomes truly compelling. Iraq's underlying strength is its colossal oil wealth, which generates tens of billions of US dollar revenues every year. This provides a powerful foundation. However, for decades, this foundation has been crippled by the very issues the currency replacement is designed to fix: corruption, a vast shadow economy, and a lack of monetary control. The current monetary reforms, therefore, are not just about swapping paper. They are about building the necessary economic infrastructure for stability. By forcing hoarded cash into banks, the government gains control. By establishing a modern, credible currency, it builds trust. By fighting financial corruption, it attracts investment. This entire process is about creating the conditions where a revaluation becomes a logical next step, rather than an economic fantasy. Therefore, the currency replacement itself may be a redenomination, but it is simultaneously constructing the platform from which a revaluation could be launched. It is the essential groundwork. A country cannot revalue a currency that is unstable, uncontrolled, and largely outside the formal system. The confirmation of the currency replacement is a confirmation that Iraq is seriously working to fix these fatal flaws. This is why this announcement is such a historic breakthrough. It moves the dinar from the realm of pure speculation into the realm of tangible monetary policy. The potential for a revaluation is no longer based on whispers but on the observable, concrete actions of the central bank as it methodically checks the boxes required for international financial credibility. The path is being paved right now, and the replacement of the old notes is the steamroller compacting the foundation. This brings us to the practical, actionable part of our discussion. What does all this mean for you, the holder of Iraqi dinar? What are the realistic steps, expectations, and timelines you should be preparing for? The announcement of a currency replacement triggers a series of logistical procedures that will directly dictate the fate of your investment. The first and most critical question is, what will be the official process for exchanging the old notes for the new ones? Historically, when a nation undergoes a currency change, it announces a specific, limited time frame, often several months to a year, during which old notes can be exchanged at commercial banks and designated financial institutions. There is always a hard deadline. After that date, the old currency becomes invalid and holds no monetary value. For you, this means that staying informed through official channels is not just advice. It is an absolute necessity. You must be prepared to act within that window. The second and ultimate question is, at what exchange rate will this conversion happen? This is the moment that will define everything. If the central bank announces a direct, one-to-one value swap as part of a redenomination, your investment's value remains pegged to the current market rate. However, if the conversion is executed at a new, significantly stronger exchange rate, then the revaluation has occurred. This is the event the community has been waiting for. Let's outline the realistic scenarios. Scenario 1, and the most probable based on all official statements, is a straight redenomination. The old notes are swapped for new notes at the prevailing market rate, simplifying the currency but leaving its international value unchanged. Scenario 2, the catalyst for the speculation, is a combined redenomination and revaluation. In this scenario, the physical swap is used as the vehicle to simultaneously introduce a new, stronger exchange rate, justified by the successful implementation of economic reforms and the newfound stability of the financial system. A third, more complex scenario involves a dual-rate system, but this is highly unconventional and carries significant risks. The most credible path is a focused currency replacement as a cornerstone of broader reform. This act does not guarantee a revaluation, but it is the single most important prerequisite for it. As an investor, your focus must now shift from forums and rumors to procedure and official doctrine. Watch for the official announcement from the Central Bank of Iraq detailing the exchange window and the conversion rates. Your financial outcome hinges on the details within that announcement. This is the moment where patience and due diligence will be rewarded. The dream of a revaluation is now tethered to a real-world process. The central bank has confirmed the major change. The next confirmation we are all waiting for is the rate at which the old will become the new. And with that, we arrive at the most important call to action I can give you. The analysis I've provided is based on confirmed actions and financial principles, but your responsibility begins now. Do not rely on second-hand information. You must go directly to the source. Bookmark the official website of the Central Bank of Iraq and monitor their press releases. Follow reputable international financial news sources like Reuters and Bloomberg for unbiased reporting on Iraq's economy. The coming months will be filled with noise, but your strategy must be one of calm, informed patience. Watch for the official announcement. Understand the deadlines. And most importantly, share this knowledge. If this deep dive provided you with clarity and a realistic framework, please pay it forward. Share this video with every other dinar holder you know. They need to see this objective breakdown. And of course, if you haven't already, hit that like button, subscribe to the channel, and tap the notification bell because we will be monitoring every single development and providing you with clear, unbiased updates as this historic story continues to unfold. This is not the end, it is the final countdown. Stay informed, stay vigilant, and I will see you in the next update.